So in the month of February, I received 10 dividend payments from some incredible companies, including some legendary dividend kings like Proctor and Gamble and LOWE'S. And in this video, we're going to go through each of those payments and add them all up to reveal my dividend income for the month of February, as well as my total income received so far in 2023. But before we get to all of that, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Speaking of which, leave me a comment below and let me know which stocks paid you a dividend this month. I'd be curious to hear if we have any of the same ones. Anyway, moving on, the first payment I received this month came from AT&T, who'd paid me $28.19, and AT&T is looking pretty cheap right now. In the last year, this company is up 9%, but the valuation's still looking pretty good. If we take a look at their PE ratio here, we can see this is sitting nice and low at 7.9, which is 51.25% lower than the sector median, and this is also over 10% lower than the company's 5-year average PE ratio. And just showing you guys my AT&T position real quick, this is one of two companies in my portfolio where I have over 100 shares. And to be exact, I have 101.5 shares of AT&T at an average cost of $21.70. So I'm down almost 11%, which isn't too terrible, and I'm getting a nice dividend in the meantime while I'm waiting for that to hopefully go back up. Now moving on, the second payment I received in February came from the other communication stock in my portfolio, which is VERIZON, who paid me $28.62, which brings our total so far for the month to $56.81. Now Verizon's also looking pretty cheap right now, and their share price has done kind of the opposite of AT&T. In the last year, Verizon is down 28.5%, but they're also looking to be at a decent valuation. Their forward PE ratio is 8.38, which is not too much higher than AT&T's, and this is also about 50% lower than the sector median, and nearly 23% lower than the 5-year average. And as this stock keeps getting cheaper, the valuation keeps getting better, the dividend yield just keeps going up. Now Verizon's a higher yielding dividend stock as it is, with a forward dividend yield of 6.64%, but because the share price has come down so much, this dividend yield right now is over 40% higher than where it's been across the last 5 years. And the rest of the dividend stats aren't too shabby as well. The payout ratio is exactly 50%, which is not too terrible. They don't have a dividend growth rate that's really worth writing home about, just over 2%, but they have some nice consistency there in the growth department, 18 years of straight dividend growth. And just showing you guys my position real quick, I have 43.8 shares of Verizon at an average cost of $51.40, and this is one of the worst performing positions in my portfolio. I'm down over 25% right now. But anyway, moving on to the third payment I received in February, this came from JEPI, the JP Morgan Equity Premium Income ETF, who paid me $9.80, bringing our total so far for the month to $66.61. Now, I don't have a huge JEPI position, which I'll show you guys what I'm rocking with in just a moment, but it is the highest yielding position in my portfolio by far. Looking at their dividend scorecard, we see that their yield is nearly 12%, 11.86%, which is unreal, and this is the only stock or ETF in my portfolio that has a double-digit dividend yield. And now taking a quick look at my JEPI position, I have just over 22 shares at an average cost of $60.22. And so far in this video, I'm 3 for 3 with stocks in the red. Right now with my JEPI position, I'm down almost 10%. And now the fourth payment I received in February came from one of my favorite dividend kings. This is LOWE'S, who paid me about $13 this month, which brings our total so far in February to $79.57. And over here on Seeking Alpha, it shows us that LOWE'S is only down about 1.5% in the last month. But within that time period, guys, the share price was as high as about $223 per share compared to where it's at now, just over $200 per share, meaning that in the last probably couple of weeks, LOWE'S has come down about 10% off of those recent highs. And I'll tell you what, I am just crossing my fingers that the share price keeps coming down, because I would love to swoop up some shares of this high growth dividend stock on the cheap. And before I show you guys my position, just taking a look at the dividend stats real quick. I mean, the forward yield isn't anything crazy, 2%, but that payout ratio is very low, 28%, with an extremely high 5-year growth rate, over 20%, making this, I believe, the highest dividend growth stock in my portfolio. And like I mentioned earlier, LOWE'S is a dividend king with 59 years of consecutive dividend growth. This is one of my favorites, guys. And as far as my position goes, I have just over 12 shares of this bad boy at an average cost of $194.33, and I'm only seeing about a 4% gain with LOWE'S right now. So like I said, it's getting pretty close to my average cost per share, but I'm really hoping that it could come down under $200 per share. That would just be awesome, and I'd probably start buying again. And then next up, guys, payment number 5 came from Enterprise Products Partners, who paid me a whopping $36.67 in February, bringing our total for the month so far officially over $100 to $116.24. And EPD's dividend stats are looking fantastic. We can see here that they have a really high dividend yield, 7.5%, making them one of the highest yielding stocks in my portfolio. And they don't have a high 5-year dividend growth CAGR at all, 2.5%, but they have some really nice consistency in the growth department. 23 years of dividend growth, and they're almost a dividend aristocrat. And just showing you my EPD position real quick, I've done really well with this stock. I have 74.8 shares shares at an average cost of $22.50. And right now I'm up 15.3%, and I'm just loving life with EPD right now, I'll tell you what. But then guys, moving on, the next payment I received is from Main Street Capital Corporation, who paid me $884 in February, bringing our total so far for the month to just over $125. Now, nothing crazy has really been going on with Main Street Capital Corporation lately. Since the turn of the year, I've picked up about 9 shares of this bad boy, bringing my total number of shares to 39.2, and I have an average cost of $38.88. And right now with my Main Street Capital Corporation, I'm just about breaking even, only up a couple percent. Anyway, moving on to the next payment, this is from Realty Income, the monthly dividend company, who paid me $9.22, bringing our total so far for the month to $134.30. And like with EPD, I am loving life with Realty Income right now. I have just over 37 shares of the stock at an average cost of $56.58. And my position is sitting pretty, guys. I'm up nearly 17%. And this brings us to payment number 8, guys. This one came from AbbVie, who paid me $14.88, bringing my total so far in February to $149.18. And AbbVie is basically a triple threat in the dividend department. Their forward dividend yield is 3.93%, just under 4. And if they drop like a few more dollars in share price, which I'm kind of hoping they do, then AbbVie will, in my eyes, officially be a high yielding dividend stock. But in the meantime, they still have that super high dividend growth CAGR at 16.92%. And they have some decent consistency in the growth department with 9 years of consecutive dividend growth. Or if you want to count the years before AbbVie spun off from Abbott Laboratories, then you could technically call it a dividend king. Now guys, AbbVie is one of the best performing stocks in my portfolio, right there behind Chevron. As you can see, it's the stock right below it. But with AbbVie, I have just over 10 shares at an average cost of $114.20, which means that right now I'm up just over 33% with AbbVie, so things are looking good. Anyway, next up, guys, is one of my favorite companies, another dividend king, Proctor and Gamble, who paid me $21.36, bringing our total so far for the month to just over $170. Now, Proctor and Gamble has seen a pretty big drop so far in 2023. Year to date, they are down 7.6%, and I've been swooping up some more shares of this bad boy lately. Taking a look at my tranches here, you guys can see I've been buying somewhat consistently since the end of January. I picked up a few shares since then, and my total number of Procter & Gamble shares comes out to just over 26 at an average cost of $138.87. And guys, I'm basically breaking even with Procter & Gamble right now. It's like right at my average cost per share. And next up, guys, this brings us to Apple, who paid me my first dividend since I bought back into the company, a whopping $1.53, bringing my total so far for the month to $172.07. And Apple is crushing it so far this year, guys. Year to date, they are up 19.5%. And just in the last month, they're up 6.8%, which leaves them with a share price just under $150, which is quite a bit above where I started buying it recently. Taking a look at my tranches here, I started buying back at the end of December, and I was buying in the mid 120s, upper 120s, even in the mid like 130s, but I kind of put a pause on buying since it's run up so much in share price, and my position is looking pretty good. I'm up 15.5%, and I have 6.6 shares of Apple with my average cost just under $130. And now moving on, guys, the last payment I received in February came from SBUX, who paid me $20.45. And SBUX is the largest position in my portfolio, and as you can see, it currently makes up nearly 10% of my total portfolio. And my SBUX position is looking great, guys. I have 38.5 shares at an average cost of just under $90 per share, which means I'm up just over 15% with SBUX right now. But anyway, with this SBUX payment, that brings my total dividend income for the month of February to $192.52, which is a near 20% increase compared to this time last year where I made $160.89. And this brings my income so far year to date to $341.18, which is a huge jump, over 22.27% increase compared to this time last year, where in the first 2 months of 2022, I only brought in $279.04. And now, guys, with all of this month's payments behind us, I want to show you what's on deck for this upcoming month in March. Looking at the dividend log page on my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to it in the description of this video. We're going to take a look and see which companies paid me in March of last year, and that'll tell us which companies are going to pay again in March of 2023. So the first one here is going to be Chevron, and I'm also going to get a payment from Intel, and this will be the last dividend payment from Intel before the dividend cut goes into effect. I'll also get a payment from JEPI, which of course they pay every single month, and then Johnson & Johnson will also be paying a dividend, which will be a little bit higher than usual, I think, because I've been adding a bit more to this company lately. Now, scrolling over, Main Street Capital Corporation, another monthly payer, will be giving a dividend, along with 3M. Gonna get a nice dividend from 3M next month. And then scrolling over a little bit more, we've got Realty Income paying a dividend. We've got Snap-on's gonna pay a dividend in March. That's gonna be nice. I'd love to buy more shares of Snap-on. And then last but not least, Southern Company is also gonna be paying a dividend. And in total, with all of these payments next month, Charles Schwab estimates that I'll bring in $115.12 for the month of March. So it should be another exciting month of dividend income. And with that, guys, if you're in the market for some cheap dividend stocks, then check out this next video right over here, where I'm telling you about 3 deeply discounted discounted dividend stocks, all of which look like great pickups in the month of March. So click right here to check them out, and I'll see you in the next one.